Hello, welcome to Small Caps. I'm Peter Capsanis. Well, aspiring nickel producer Blackstone Minerals has expanded its portfolio with the acquisition of a Canadian mine to complement its Vietnamese operations. Blackstone, that's ASX code BSX, best known for its Ta Khoa nickel refinery in Vietnam, has now entered into an option agreement with CaNickel over the Wabowden nickel project in Manitoba, Canada. It's a major coup for the Perth-based ASX-listed company, and to tell us more, I'm joined by Managing Director Scott Williamson. Scott, good to talk to you.
Yeah, thanks, Peter. Thanks for having me.
Look, first of all, I mentioned Vietnam. That's long been the focus, but now Canada. How does Blackstone Minerals plan to leverage the acquisition of the Thompson nickel belt in Manitoba, Canada, to enhance its overall business strategy, Scott?
Yeah, thanks, Peter. Really exciting news this week. And we've actually been investing in Manitoba for a couple of years now. And we particularly like Manitoba because of the geology. The nickel deposits are a little bit higher grade than in other areas of Canada. We also like the fact that there's abundant hydropower. So around 100% of the power in the Manitoba region is hydroelectric power. So that's driving the green credentials. Today's new announcement, or the recent announcement, is really exciting because we've got an option to purchase the previously operating Wabowden project, and it was previously operated under the Bucko mine, and the Bucko mine operated between 2009 and 2012 and went into care and maintenance when the nickel price was much lower. So very similar history to the Vietnam mine, which we acquired around 4 years ago now. So the history is very similar in the fact that it was a previously operating mine. It had trouble with the nickel prices at the time, and now at today's nickel prices, we see a lot of value to add. So it's a really interesting opportunity where we can bring the nickel from Manitoba and bring it into our refinery in Vietnam and upgrade it into these chemical products for the lithium-ion battery.
Talk to me about the option arrangement, because it's it's a quite a staggered approach, if you will. You've got, I think, the 12 months to buy in, and in the fullness of time, complete the acquisition. Can you just go through and break down those option steps for us?
Yeah, no worries. So we have 12 months to exercise the option, and during that period, we'll further assess the project, but also understand what are the different funding arrangements that we can look at. So we'll look at the joint venture partnerships, the different government funding that's available, all of the different alternatives on funding. So we'll look to acquire within the 12-month period. So the first payment is $20 million cash and $10 million in Blackstone shares, and that'll be at the time of exercising. And then there'll be some milestone payments. So there'll be a second payment in 18 months after the first payment. And then there'll also be some follow-on payments depending on milestones like permitting and first commercial production. So it is very much a staged earn-in. And we've got, most importantly, we've got the next 12 months to really understand what is the best way to finance, but also develop this project. We'll be able to integrate it into our current joint venture process, which is we're running for the Vietnam asset. So we're currently running a joint venture process there. We can open this asset up into those opportunities with those potential partners and see whether they may be interested in this asset as well, and really get their gauge on, well, what is the best way to develop this project.
Obviously, you see quite a bit of potential, and there's a lot of strategy behind this acquisition. What's the significance of the Thompson nickel belt? I know you touched on it just right at the top, but in terms of the global nickel market, Scott, where is the value that you see, or where do you think you can unearth the value?
Yeah, so we particularly like the Thompson belt because it has scale, but also has grade. So there are a lot of large scale nickel sulphide opportunities globally, but a lot of them have a fairly low grade, which means a very high capital requirement. With the Thompson belt and the particular assets that we've put our foot on here, they've got what we call a medium grade. So in the sort of 0.3 to 1% nickel range, which means that you've got some really good nickel units and you've got scale. So you've got long mine life, security of supply for the refinery, but they're not low grade in the fact that the capex is nowhere near as high as some of those lower grade opportunities. So we like the fact that the grade is a little bit better, but also you've still got the long mine life. So some of the very high grade opportunities just don't have the scale and the security of supply. So that's why we like these medium grade opportunities. They can give us multiple decades of supply, but also not requiring large capital up front. So it's a sweet spot in that medium grade range. So and then you've got that abundant renewable power, so 100% hydropower. We've got some great infrastructure as well. We've got a rail line running straight through the project that can go west to Vancouver, then into the refinery, or we can always also access the North American markets through that rail infrastructure. So we've got the hydro power line running straight through the project. We've got a highway running through the project as well. So well located in a mining district as well. So the Thompson belt has been mining for over 50 years, currently operated by Vale. So we've got all those skill sets that you have with a mining hub like the Thompson belt.
You've preempted a few of my further questions, but that's okay. That's good. And just to visualize your geography, the geographic location of Manitoba, are we talking East or West Canada?
So we'd say it's probably central. So, and we think that's a great location because you can go west to Asia or you can go east into European markets. So it's more in that central region, and you can also access the North American area as well. So, and some great rail infrastructure. So you can rail down to Winnipeg, and then you go east and west from there. And yeah, so it's central Canada, and sort of not far north either, not so far north that you're heading into those regions that are a little bit more difficult to operate. So we're still far enough south, so we've got some really good infrastructure, but being centrally located, we can go east or west depending which market.
So this acquisition, how will it impact on Blackstone's production capacity and market share in the nickel industry moving forward? I mean, there's obviously, you mentioned it, I concede you in terms of milestone payments in terms of the full acquisition, but this is the long game here, and obviously let's call it what it is. Obviously, it's going to be a massive feeder for your Ta Khoa refinery, I guess, in the fullness of time. So, you said you used the word yourself, scale, opportunities to scale up. So how do you think that's going to impact on your market share in the nickel industry?
Yeah, so with the Wabowden project, there's 1.3 million tons of nickel in resource. So it's NI 43-101 resource. And that's 2.5 times the resource that we have in Vietnam. So combined with the total sort of resource base that we're looking to acquire here, we would have the third largest nickel resource on the ASX for nickel sulphide. And most importantly, we'll be able to feed into the refinery, and the refinery can produce around 46,000 tonnes per annum nickel. So that'll be one of the largest nickel producers on the ASX, if not the largest. And so we're looking at a significant scale here. To put that in perspective, some of the larger nickel miners like BHP and Glencore, they're mining sort of around 100,000 tonnes per annum, or maybe a little bit more, but we're aiming to be almost half as big as one of those major players in the nickel industry. So it is a big move, but we needed a big move to fill the refinery. So we've always said half the feed would come from the Vietnam mine, so around 18 to 20,000 tonnes per annum can come from Vietnam, and then the other half will come from Manitoba. And so we with our other existing interests as well, we see Manitoba being a hub. So we've got interest in Lynn Lake and Monago. Monago is to the south and Lynn Lake to the north. So we see Manitoba being a central hub that we can feed into the refinery and get those nickel units up. So it's a really important feedstock into our refinery, and that refinery is getting a lot of interest from those downstream players. They need a lot of nickel. A lot of them have said, "Oh, can you make the refinery bigger?" So that now that we've got a bit of supply, we can maybe look at, well, how big does this need to be to feed the demand that's coming from the lithium-ion battery?
All right, so you've got the two hubs now in Southeast Asia and now North America. Are there any technological, operational strategies that you're employing to maximise the assets?
Yeah, so one of the key focuses of ours is to get the CO2 footprint as low as possible, and to do that we want to really focus on areas with renewable power, and that's why we've chosen these two hubs. The other thing that we're looking at is fully electric mining fleet. So we're in the electric mine consortium with some of the major players in the mining industry. So we're very focused on electrifying our fleet. The other benefit we've got is the hydromet process that we're using is a much lower CO2 footprint. So what we're looking at is producing the lowest CO2 footprint nickel in the industry, and having that Manitoba hub actually will reduce our CO2 footprint even further. So in our previous studies, we assumed we're bringing in third-party feed from Australia, which would have been using, say, a diesel operated mine, and now with the Wabowden project, we can reduce our CO2 footprint even further. So yeah, that ability to go for what we think will be the lowest CO2 footprint in the industry, which has been verified by the Nickel Institute, will actually, we think, over time attract the premium brands in the electric vehicle space. So your premium brands in Europe and the US, they're very particularly focused on the ESG credentials and the CO2 footprint.
Is that a deliberate strategy, the adopting that ESG philosophy, given the current climate and obviously in the 2050 net zero emission target by the federal government, etc.? I mean, does that have to be part and parcel of your strategy moving forward?
I think we were just very lucky that we're operating in a region with abundant renewable power in Vietnam, and then so with that renewable power combined with our flow sheet, it made sense for us to focus on that part of the market. There is an abundant supply of nickel coming out of Indonesia, so we need to really decouple from that particular supply chain, and the way to do that is to decouple based on ESG credentials. So what we can do is we can stay away from that supply chain that's not interested in ESG, and we can really focus on those particular customers that are really focused on their brand and their reputation. And so it's really driven, it's a customer-led strategy more so than a government sort of policy-led strategy, but the government policy is really what's pushing the electric vehicle manufacturer. So ultimately it is government-led, but our sort of customer is really what's driving our immediate focus.
There's always challenges and risks associated when you're trying to integrate assets from one place to another. Have you care to raise any kind of concerns you might have and how you plan to sort of mitigate those risks?
Well, I suppose the way to think about it, we're operating in an emerging market, and we've been able to operate there effectively for over 4 years now. One of the benefits of operating in Vietnam is the low operating cost environment, and so that has been a really refreshing for the business to be able to get a lot of work done in Vietnam. So when we're obviously not expecting the cost in Canada to be as low, but the benefit is some of our expertise that we've built in Vietnam, we can actually bring those over into Canada. For example, we're already looking at bringing some of our geologists, because it's the exact same geology that we have in Vietnam. We can bring our Vietnamese geologists over to Canada and use some of the equipment that we've got in Vietnam as well. So we've got a full geophysics crew with two sets of geophysics equipment. There's no reason why we couldn't potentially bring some of that labour and equipment over into the Canadian project. So yeah, so we're looking at synergies already, and so yeah, I think for us, if we can work successfully in an emerging market, it's going to be even easier to operate in a tier 1 jurisdiction like Manitoba. So it is a mining province, so it has had a long history of mining. So we're pretty confident that, and we also have previously operated in Canada before Vietnam. So we started out as British Columbia focused explorer. So we've got a long history of operating in Canada as well. So we understand how important First Nations and community engagement is, and that'll be a big focus of our efforts in Manitoba.
It's really, I guess, it's a good news story, if you will. And I suppose from your perspective, you're exporting a lot of, to a degree, the Australian story and Australian expertise in two different nations. How's the market received this news so far?
Yeah, so it's really interesting, the fact that the Canadian markets have been difficult for some time now. So we've seen a lot of Australians going into Canada and picking up assets at the bottom of the market. So it's very much a counter-cyclical play, and that's, unfortunately, that's difficult for capital markets, because capital markets are very short-term focused. So what we see is, yeah, we've got some strong expertise here in Australia. We can seize on these opportunities at the bottom of the market, and we've done that as an Australian industry over the last sort of 2 years, whereas the Canadians have really struggled with their capital markets. So our capital markets are still very supportive. We've got very supportive institutional shareholder base. So all of our major shareholders have come into this capital raising. They're supporting our move into Canada. They know how important that Canadian asset is to the long term and the bigger picture strategy for the refinery. So yeah, it's been well supported from our institutional shareholder base, hoping to obviously get some support from the retail shareholders as well. But yeah, it's a great opportunity to sort of, I suppose, jump on the fact that there's a little bit of a disconnect between the Canadian market and the Australian market, and we're not the only ones to sort of go to Canada and pick up these opportunities.
Well, I'll let you editorialize it in another way, then, Scott. How do you think, now the acquisition of this asset, where does it position you globally? I know you touched on it earlier, but in all seriousness, where does it position you globally? I mean, you're on the cusp of being a major player now, aren't you?
Yeah, and the reason why we are, I suppose, focused on a bigger strategy is really driven by our understanding of the downstream partners. So, as I said, some of these partners need hundreds of thousands of tons per annum. So we're looking to deliver 46,000 tons per annum. It's enough to get them interested and excited. If we were going for anything smaller, unfortunately, you're not going to attract these partners. So they need scale. And so they need the capital is not an issue for these groups. They've already invested tens of billions of dollars into Indonesia, for example. So the capital is not the issue, it's the scale. And that's why we've gone for larger scale. So this will be one of the larger sort of opportunities for these downstream players to come into the upstream mining of and processing of nickel. So that's what's driving this. So it's not because we want to do this because we want to be the next BHP. We're doing this because the downstream partners are asking for it. It's nothing more than that. They want security of supply. They want multiple decades. They want more than the average junior can deliver. And that's why we've had to sort of think a lot bigger than the average junior. So we're going for something of scale that is then going to attract those bigger partners.
Okay, I've got to ask, lithium is the flavour of the month. Is nickel going to come back with a resurgence?
Yeah, so what I would say is we purchased the Banfulk nickel mine at the bottom of the market. Unfortunately, nickel hasn't performed as well as we had hoped in the last 2 years. What we can say is a third of the industry is cash flow negative at today's prices, so that's not sustainable. So the industry needs more nickel, and at today's prices, there's no incentive to produce nickel mines. So the nickel price will rise up to the sort of plus $20,000 per ton mark. When that happens, I'm not sure. What we do know is that nickel moves very quickly, and so it is the most exciting base metal because it moves so quickly, and it'll catch people by surprise. So yeah, are we the next lithium? I'm not sure, but what I can say is that today's prices, it's not sustainable. and the demand coming from lithium-ion battery means that, yeah, today's prices will rise in the coming years.
Well, Scott, thank you very much for taking the time to chat to us and give us some insight into the Canadian acquisition. Before I let you go, was there anything else or last remarks to any would-be investors from that retail side that you might want to tell them, leave them with one takeaway message?
Yeah, I think as I was saying, this is a counter-cyclical investment, and it shouldn't be, because what we're seeing behind the scenes is there's been no change in demand from lithium-ion battery for nickel. So all of this sentiment towards nickel is, we believe, is definitely not being reflected in the conversations we're having behind the scenes with the partners. So even though the nickel price is a little bit low at the moment, the long-term, medium-term, and even the next couple of year outlook for nickel is very strong. And so now is a great time to get positioned. And that's why we're making acquisitions like this. And that's why we've structured the acquisition the way we have as well. So we're minimizing dilution up front, but putting our foot on this asset so that we can now bring in the partner to really unlock what is two very exciting projects that we've got our foot on here.
Yeah, absolutely. All right, Scott. Well, look, we'll leave it there for today, but really keen to watch this space, as they say, and looking forward to any developments with the Canadian acquisition. And do keep us informed, and do let us know how it tracks ahead. But in the meantime, thanks for joining us on Small Caps today.
Yeah, thanks, Peter. Thanks for having me.